Hello everyone, Will Flanagan here with Pacific Northwest Home Loans. Hey, I'm here to talk about a common question that comes up in lending. It's called the VA assumption. And how can I qualify for the VA assumption? The VA assumption is a great loan product, but what it allows the buyer to do, they don't have to be a veteran. It helps if they are, it doesn't have to be a veteran, allows them to purchase someone else's home or take over the terms of their loan, I should say. If they have an interest rate of 2.875, it allows that buyer to go through the process, getting qualified with that lender, whoever that loan is with, to allow them to take over the loan. It's a great benefit to be able to assume a veteran's loan. The downside of that is we've had double-digit appreciation for many, many years. So if that veteran has paid down his mortgage down to $200,000 and the house is worth $400,000, you as the buyer has to come up with the difference of $200,000. The lender is not going to allow you to assume the loan at $400,000 because you're basically making a whole new loan. So they'll allow you to do the $200,000 at that interest rate, but for the additional $200,000, you have to bring that money to the table. And if you do have the means and source to do it, it's a great product. Here's what you need to know, which is a common myth in our industry, is the loan officer ourselves are taken out of the process. We can't help you navigate those waters. The lender that has that loan, you have to go directly to that underwriter and qualify. And that makes you become a loan originator in your own mind for that process to get that loan. Those loans can be time consuming and take a lot of time to close. They're not a 30-day closed loan, can take up to 6 months because you're talking directly to the underwriter of that lender and providing them with the necessary documentation and paperwork to the lender to qualify for the VA assumption. The other downfall too is it ties up the seller's entitlement. If he's a veteran, would have to be, ties up his entitlement until you either refinance or you sell that loan. It ties up entitlement. So another drawback for the seller would be is in the likely event the borrower defaults on the loan, your entitlement gets wrapped up into that default, which would hurt your possible status of buying your next home, would actually put a negative mark against the certificate of eligibility, which every veteran gets on their entitlement, is how much they can borrow on their next house. But it's a great product, very low cost and low in fees if you find the right seller and you have the cash to be able to pay the difference. So it's a great product for those types of situations. However, like I said before, it could be a very time-consuming, difficult, long process because you as the buyer becomes a loan originator and you have to navigate the terms with that lender to understand the VA process. So that's what I have for you about the VA assumption. It's a great product if you can find the right seller, but you have to have lots of cash typically to make up for the differences between what they owe and what the home is worth. If you have any more questions, you would like to get a hold of me about your scenario, please don't hesitate to reach out to Will at PacificNorthwestHomeLoans.com or call me at 509-263-7133. Hope you guys have a great day and you take care. Goodbye.